Thanks everybody for joining us today. We're going to cover a couple of different topics. Thanks to coming to the weekly update. So let's get right into it. First and foremost, questions. If you got them, service at o'harewealth.com, or you can always text us 414-644-0060. Thanks again for everybody who watched the Market Outlook. I know we did that 2 weeks ago. I know it was a little bit longer than usual, but I think it was very, very informative. Obviously, a lot of things to cover going into this year, and it spurred a lot of questions, some of which we're going to cover today, some of which are very, very topical. But let's get right into it. Dad, are you ready to go?
I am ready to go.
All right. Well, I think I'm taking the first question. Great. What is DeepSeek? Well, it's all in the news this week. So, if you're watching this in a couple of days, hopefully it's still relevant. No, what happened in short is the Chinese government and the Chinese hedge fund in China released a basically a new AI they call DeepSeek that allegedly, and we're not sure because there's a lot of speculation on this, took only about $5.6 million to train this AI model. Now, to put that in perspective, usually we're thinking billions of dollars. So it's extremely expensive to train AI models. And why? Well, because normally you have to have the computing power of an extremely powerful model basically constantly face off and butt heads and train with an equally powerful model. They basically said we didn't have to do that. We used a very simple, smaller model, and we were able to get the equal amount of training. There's some speculation as to whether or not that's correct. We're not quite sure, but it is a change. I mean, it caused a huge disruption in the market earlier this week, especially for AI investment companies. But we just got earnings calls from some of the major AI players, and they said they have no intention of slowing down their R&D budgets. So first of all, the 5.6 million number sounds like that was to train, not to build the model. So it's a little bit different. But if they are correct, if this is a new mathematical algorithmic formula that made things even better for AI, well, then the postulate is that's probably great for everybody. It's an open source AI model. If one person can do it, somebody else can do it too. And it's a new way to think about things. And if that's the case, it's going to be incredibly powerful. It sounds like it's built off of the current ChatGPT OpenAI system. So there are a lot of similarities there, but it's definitely a little bit of a disruptor. There's questions that people are definitely rethinking their investment philosophy around some of these things, which is good and bad. Part of it is the long term means that this is probably going to make AI cheaper. And well, if AI is cheaper and more user friendly, that doesn't, in our opinion, say that we're going to use less of it. If anything, we're going to use more of it. So, what is DeepSeek? It's we're not quite sure yet. There's a lot of things that came out around this, and there's a lot of speculation. But it is something to keep our eyes on because I think right now it's the number one downloaded app in the App Store. So it's obviously wildly popular. Are there some security concerns around it? Yeah, it looks like they're sending a lot of data directly to servers in China, which I know has some people concerned. As probably rightfully should. And how powerful and how good is it? Well, that's still yet really to be tested. And it sounds like it's pretty good, and frankly it should be if it's built off the OpenAI platform.
Can
Um,
I, JD,
yeah,
can I add something to that?
sure.
Yeah, the other thing to think about here, there's a big difference on where these AI models are going. The companies that are developing, like Microsoft, Facebook, Meta, who talked about last night, they're developing this for eventually to get as a commercial business. They want to get paid for this. So it's very important to them to make sure this is a secure system. And JJ made the point, this is coming out of China. And yes, a lot of people will use this for free. Students are going to write papers with it at college and things like that. But from a security standpoint, if I don't think anybody noticed, or I think everybody noticed this last week, we banned TikTok in this country. It went dark a week ago because we didn't trust the servers in China. So I think the market has overreacted. The US companies aren't going to suddenly go put all their data into Chinese servers. And that's why they're going to continue to spend here. It might cost more, but the security is a much bigger issue.
No, great point. That actually leads me into our next question, right? totally different topic. What is the Fed making the right move? I don't know if everybody saw this yesterday, but the Fed decided to leave rates unchanged. And right now the market is betting that we shouldn't expect our next rate cut until closer to June. So with that, do you want to comment on what the Fed's doing?
Yes, the Federal Reserve Board came out yesterday, and of course, Chairman Jerome Powell is the one who speaks for the board. And the messaging that we got yesterday didn't move interest rates much at all, which means that the markets, investors, sort of anticipated what he was going to say and do, and they thought he would do nothing as far as rates, and that he would take a stance that he's going to be patient and watch what happens. Inflation is coming down, and as he said, it can be a bumpy ride and not a straight line, but it is coming down. There does not seem to be a lot of wage pressure, and that's very important for the Fed to see. If wages are going up very fast, we're going to get wage push inflation, which is what we had in the 70s. Wages growth now is below the or back to the pre-COVID level. So in his comments really were things look pretty good. And our economy, we just got the numbers today, the economy grew at 2.8% last year. That's a very good economy. If you remember from our market outlook, 2% is trend line growth. Anytime we get better than that, we're happy. And it looks like we're going to grow 2+ again this year. And we're doing this with inflation coming down and not a lot of wage pressure. Housing is still lagging. That's shelter, rent, and houses. But that is slowing as well. So he told the market, let's wait and see. We'll look for better news, better information. But one cut this year or two is probably still realistic. And remember, the Fed is flexible. If something goes wrong here, they can cut rates faster. Honestly, we don't want that because, if they're cutting rates faster, that means the economy is not growing 2% plus this year. We're slipping into a severe slowdown or a recession. He also mentioned that if he's wrong about inflation and it trends up this year, he can stop cutting rates and it's eventually maybe even raise them. And if you saw our market outlook, we talked about this. This happened in the early 90s, 93 to 95. The Fed started cutting, and then after a few cuts, stopped and went sideways. The economy recovered well. We had a soft landing. Economy got strong. They had to start raising again. And quite frankly, if they don't cut any more right now, and they have to start raising in 26, second half, that means we have a darn strong economy. And that's good. It's not great for bonds, especially the long bonds, which we don't typically buy a lot of, but it's great for profits, which means it's great for stocks.
Yeah, and I know if you want to reference it, we did do it. The video is out if people want to watch that market outlook, but we brought that chart. This is our expectation is that the Fed's moves, barring something unforeseen, are going to look a whole lot like the trends we saw in the mid 90s.
Yeah, and that was a very, very good economy and a very good time for stocks.
And there was we engineered a soft landing. The Fed engineered a soft landing. It looks great. So moving on to what do we think is going to happen for 2025? And one of the jokes we've made maybe often over the years is the fact that, well, there's probably an oversupply of prediction, really because there's not a lot of real prediction, but there's a huge demand for it. And let's face it, economics, supply meets demand. And if you don't have enough real supply, you have a lot of fake supply. So what do we think is going to happen in 2025? This is a chart actually brought to us, and this is an aggregate. I'm going to blow this up, an aggregate of what people think might happen in the market and what experts are their highest conviction items. So if you look here at the center, right, an increased geopolitical uncertainty and market volatility is probably the only thing everybody agrees on, which is a pretty broad statement.
Yeah, it has the most dots.
Yes, it has the most number of dots. The least number of dots says the least number of predictions. But, OpenAI reveals the first AI hardware product. There's a few dots on it, not very many. But where are things highly concentrated? Doge will struggle to cut significant spending is sort of a moderate expectation. Markets will broaden beyond the Magnificent Seven as a high conviction item by, and this was, and remind me, Ted, this was collated by, it was a whole bunch of different articles and white papers
Yeah,
that
this
were
global
correlated to look for
forecast
these
theory,
factors.
I think we got the website at the bottom. I can't read it, but I bumped into this information on this website where I was researching some other data, and I thought it was kind of fascinating and interesting because it's an aggregate of everybody's predictions out there. And I think you're pointing out correctly, JJ, the more dots you see, it seems to be the more consensus of what's going to happen. Interestingly, if you look at the third row to the right, there's a lot of dots that think the S&P will make new highs this year, returning 10 to 15%. There's also a lot of dots that think the market will broaden outside the Magnificent Seven, and that's already true. The equally weighted S&P 500, which we talked a lot about in our market outlook, has outperformed the Magnificent Seven or the regular S&P 500. The other one I think is interesting is on the bottom is a lot of people think the Russian-Ukraine war is going to end. And it got a lot of dots.
It's nice that it doesn't have to say how.
That's right.
But no, 2025, I think we laid out our predictions for what's going to happen. And like I said, it's a long form explanation as to all the reasons why we think what might happen. But with that, I think we're going to go into our book recommendations for the coming months. We actually have two today. One is Proximity, which is how everything's going to get closer to us and more quickly and easily delivered. And we talked about that earlier this month. And we actually, going forward, is our plan is to create a video once a month where we talk specifically about our book recommendations and have that available for replay instead of rehashing it at each call. But Dad, you want to talk about our second book, our bonus book?
Yeah, we have the bonus book, which a friend of mine recommended to me about 6 months ago. And for those of you in our audience that are my age, you remember the Blues Brothers. And this is the making of the Blues Brother movie. And it really is not just a movie, it's a biography of John Belushi and somewhat of Dan Aykroyd. The book's a fun read. It's a walk down memory lane for us who grew up in the 70s, early 80s. It was a fun thing to read. Fun fact, this movie had the most car crashes ever done in a movie when it came out. It was like 115 cars got crashed. And if you remember the movie, yeah, it probably was 100 plus. But it's a fun read. Thought we'd give you a bonus this month of something easier to read. But we hope you enjoy it.
No, and with that, remember to send in your questions. Obviously, we very much appreciate everybody joining us today. And we look forward to seeing everybody next week. Thanks again.